What's up, stock traders? My name is Mike Huddie, and I turned 20 racks into $1.5 million trading penny stocks. And now I want to teach you to do the same. Welcome. This is Stock Therapy.
What's up, stock traders? I'm Mike Huddie, and today I want to go over what I see as the play of the day in terms of my playbook and the strategies that I like to trade. It's going to be SBEV. It's just pretty picture perfect, textbook, multi-day breakout, but there are a couple nuances to it that are a tad bit confusing. So I really want to touch on them and then maybe straighten out the confusion. This is a stock that, Dom and I were talking about in Stock Therapy yesterday. We were having a nice little debate about it. He was kind of saying, we were both kind of saying that this is the chart that we're looking at. And, when we're looking at a multi-day breakout, we're looking for volatility. We're looking for a stock that has a, big gap up and spike and a run out of nowhere. And the volume becomes quite extreme. So you can see that's kind of happening down here in the twos. And all of this overhead resistance, it has traded higher in the past year and a half or so, but the volume is so dismal that, I don't really consider this overhead resistance to be significant or key. We did have a little debate about, whether this volume here, this 4 million shares that traded, this volume stick down here, was considered, heavy overhead resistance. I was kind of in the boat that it did, but clearly the volume eventually overwhelms whatever that is, and it's very insignificant given, hindsight, I suppose. So everything's a little bit easier in hindsight. Moment of, we were having a debate about it, but at least we're on, the right track. At least we're looking at the right stock, the stock that has the capability to really be explosive. In terms of the market cap and all those other variables that we look at, this one definitely fits the criteria that we often talk about within Stock Therapy, and it's straight out of trading tickers from Tim Brittani. So let's get into the intraday. I like the 5-day 15-minute chart a lot. You can really see this nice uptrend that this stock has held really nicely. And then again, this 190 level right here, that high that it made is the breakout level. Now, specifically, I did not buy it yesterday because, when it spikes from 172 to 190, I do consider that a bit of a straight up spike. I'll buy, a major daily breakout pretty much at any time of the day. The one exception is if it is into a straight up spike. In that case, I'll let it pull back, consolidate, slowly build up and climb back, hold that trend, all that good stuff, and I'll buy the break of the new highs. So in this case, I'm not buying 190, I'm letting it pull back, slowly grind, build back up. And then today, these are the new highs it made shortly after. It's not like it broke out and really extended itself. We're still very close to that breakout level. We're actually holding on to that, just underneath that whole $0.50, $2 psychological level. So coming into today, when it actually breaks those new highs, you actually do have a better risk reward scenario. Risk reward is something we touch on all the time in Stock Therapy. It's pretty much the key to really growing a small account or a big account, compounding your gains. Generally, when I'm buying a multi-day breakout, I'm risking some kind of previous support level, or I'm risking red green. The idea is, if a stock breaks out and then goes below the previous day's closing line, I consider that daily chart to look like failure, and I get out. So if I'm buying 2 here and I'm risking the previous day's closing line, let's call it 190, I have 10 cents of risk. The day before, if I'm buying the breakout into the straight up spike, 190, and the low of day, green, red, same scenario, is 172, I have 20 cents of risk. So, actually being patient and, not buying the straight up spike offers a better risk reward scenario. So in this case, I'm buying 2, I'm risking 190, and then you can have that really nice 1 to 10 type risk reward. If you make it $1 into this, 30-minute spike, that kind of sweet spot, that 1 to 10 that doesn't happen very often, that pays for your next 10 trades to either be winners or losers. This is a setup that really does pay the bills. A couple nuances to it about patience, not buying straight up spikes, allowing the trend to continue to hold, higher lows, again, all that good stuff. And then today, it just seems like, there was no news or anything. It just seems like a lot of traders did notice this $2 level to be quite significant, and that's what brought in the volume. It brought in a lot of momentum buyers. Maybe there's a short gain squeeze, but this kind of does have that look where just a lot of people recognized some merit behind this chart, recognize this $2 level, and it had a really nice spike this morning, a great day trade, a 30-minute trade really is what it was for me. And just a great pattern to remember. This daily chart pattern is absolutely beautiful. And again, we saw it earlier this week with BTCS. Very, very similar thing. We did another lesson about this in Stock Therapy. about, a very similar pattern that worked earlier this week, where you have the stock that gaps up and spikes on massive volume, consolidates for a couple days, and it has that right market cap, it has that overhead resistance that's not really on a lot of volume. And this one worked really well. So, just in this week, we had 2 different multi-day breakouts that, that offered some really sweet, risk reward scenarios. So that was the play of the day today. A couple nuances behind the multi-day breakouts. Thank you guys so much for watching this video. Again, if you like this video, hit that like button, subscribe, and check out Stock Therapy in the description. We have tons of videos in Stock Therapy that are archived, different setups just like this, as well as other videos on YouTube. So definitely look through the catalog and, click around, see how much you can learn. YouTube is a great place for everyone to become knowledgeable, whether it's just about stocks or just general information. The internet is literally at your fingertips and you should utilize that.